Welcome back to the Open here on BNN Bloomberg. I'm John Ehrlichman. We're just over 15 minutes away from the start of trading on this Friday. We've got some jobs numbers to digest in the U.S. today. Now, we're still a week away from the May numbers for Canada, but the numbers for May in the U.S. topped estimates, which would suggest companies still confident about hiring, given some of the questions out there about the economic uncertainty. At the same time, we've got another story out there, reports that Elon Musk has a very different view right now, a, quote, super bad feeling about the economy and the need to cut about 10% of jobs at Tesla based on an email that Reuters saw. So let's get some perspective on what's happening, both from the perspective of Musk and from the perspective of the economy. Michelle Schneider, Managing Director at Market Gauge Group, joining us with some market analysis, and Jim Anderson, longtime social media expert and the sector lead at Glasswing Ventures, joining us. Nice to have both of you with us. Michelle, I'll just start with you and the broader job story. And we should probably explain to our audience that we have seen some pre-market weakness. You know, part of that might be the fact that you saw a nice rebound for stocks yesterday. Part of it might have been that I suppose some people thought the numbers might be a little cooler, and maybe that takes a little attention away from the Fed. A strong number presumably would keep the Fed on course. What's your takeaway on the jobs data today?
Well, I definitely find it to be pretty much expected in that people are going back to work to some degree, although there's still a lot of stimulus money floating around and there's still a lot of open jobs available, over 11 million. But I also believe that you're seeing announcements from companies not just like Tesla, but Microsoft, Amazon, Apple, a few others have said that they too are going to be slowing hiring as we move along. So these numbers reflecting something really positive right now, but when you hear Musk and even Jamie Dimon preparing for this hurricane that he keeps talking about, what they're really referring to is that the Fed right now are more focused on inflation than they are on the economy, and I think that they can see their way to the fact that that will actually put some more brakes on the economy going forward as the consumers start to run out of money with these high prices that probably are not going away anytime soon.
Jim Anderson, let me bring you into the conversation. You've become our default Elon Musk reporter, and Michelle talked about the hurricane comments from Jamie Dimon. Musk himself is a bit of a hurricane, as we have seen with all those back and forths on Twitter. When you hear about a email going out saying, hey, we got to get rid of 10% of the staff, is that Elon being Elon? Is that, to Michelle's point, just a growing trend of companies getting cautious given the economic uncertainty?
Yeah, John, the first thing I was struck by is how normal it was. You know, first off, he didn't tweet it. He actually sent an email to his senior management team, which is a refreshingly normal thing for a CEO to do. You know, there's such a short loop between Elon Musk's brain and Twitter. You were used to every thought he has ending up on Twitter. So I think, you know, my other take is, you know, when billionaires start to be worried, I think we should probably be worried. It's not a good sign when one of the world's richest people, you know, in addition to what Jamie Dimon has said, is sort of expressing concern about a pullback. And these things can become a self-fulfilling prophecy, right? Economic confidence is a very tricky thing. So I think, you know, we can all wait and see what Elon Musk does next or says next. But right now he's behaving, you know, quite refreshingly normal.
Well, look, we know, Michelle, that even Elon Musk didn't quite know what was coming in terms of the tech wreck. I would imagine he would not have put forward that $44 billion offer for Twitter if he knew we were going to see tech stocks sink as much as they did. And you were alluding to this, but if we do get more companies, I mean, obviously today the story is a positive one for the U.S. jobs market today, but if you see more companies that are putting the brakes on hiring or putting out cautious outlooks, I would imagine that starts to change the math, like the E in the PE equation of whether or not it's worth buying a stock.
Absolutely, and I think you just have to look at the Fed. We have to keep looking at the Fed. Everybody loved to look at the Fed in terms of their accommodative stance over the last really 40 years, but particularly over the last decade plus. And now, equally, you have to look to the Fed and what they're talking about. They are definitely hawkish. Part of the rally we saw in the markets over the last couple of days is people thought, oh, there's some soft economic data. That means the Fed's going to pivot and they're going to become more dovish. And don't worry, they're going to say save the economy. But you have to listen to face value. I mean, someone with Musk, it's sometimes hard to know what face value is, but the Fed is very clear. And they're very clear that right now the trajectory is for higher yields to control the back of inflation, which people say have peaked. I say has just leveled off for now, but not necessarily peaked. And that's going to affect all these companies. Higher interest rates is not something that anybody's used to. Obviously seeing it in the housing market, but you're going to see that everywhere. All these companies that borrowed for zero, they can't do that anymore.
You know, as Michelle's speaking, Jim, I'm thinking to another big story this week, which is Sheryl Sandberg, the longtime chief operating officer at Facebook, now Meta, announced she'd be leaving. And a lot of the pundits said, well, look, they're moving into this new chapter for the business, and it's going to get more complicated. But it's already getting complicated because of this concern about the slowdown and what it means for advertising for these social media giants. I would imagine that's something that we have to watch as well.
Oh, without a doubt. I mean, in many ways, we've talked about this before. I think this is just a return to earth, right? You know, trees do not grow to reach the sky. Meta was so ridiculously highly valued. It still has an incredibly robust multi-billion-dollar advertising business. And yeah, it's certainly an impact if you're a shareholder in Meta or any of these big advertising companies. So I just view that as, in many ways, a correction back to, you know, more reasonable valuations. And yeah, they do have a lot of challenges. And I think in many ways it's a logical time for Sheryl Sandberg to leave because they've got to reinvent what their advertising business or their business model may be in a world dominated by Meta and not Facebook.
Before I wrap things up, Michelle, coming back to you, how are you navigating the investing world given everything we've been talking about? What are you leaning towards these days?
Well, I try to think somewhat positive in just picking up what Jim said, that we will at some point get to some kind of fair valuation. I don't think anybody really has understood what that means. And that means opportunity will emerge. So for now, we're very heavy in cash. We're pretty invested in China, have been for the last few weeks, because they're actually doing QE while we're doing QT and coming back from COVID. And we're looking at areas like solar energy because at some point, these high oil prices with the whole alt energy space still being relatively cheap, I think will start to come back to favor. But we're waiting for dips. This is a market that's in a trading range. And so you really don't want to chase rallies. You want to look for dips that start to settle down, buy, have really quick stops if it continues to go further, and then take advantage of the rally and start taking some profits. So that's where we're at right now. We're looking for those opportunities in those particular areas, particularly, like I said, alt energy, I think is really something to keep on your radar.